I mean, this is like Tuesday redux all over again for me. Krishna, what do you make of this kind of day?
Well, it's the same worries. It's China slowing down, and it's the Fed, which insists on tightening despite the fact that the world economy is headed lower rather than higher. It's the same set of issues. I think we reacted positively to Dudley saying all sorts of soothing words. Over the weekend, Stanley Fischer said all sorts of harsh words, and we have been reacting badly. At the end of the day, it's really about growth. Growth is slowing down, and we'll just have to slog through all of this.
So how much more legs does this kind of sell-off have if we spill over from August?
Well, for the market to take one direction, I think we need to have one or two things happen. Either the growth outlook has to improve materially, which I think is unlikely, or the Fed has to say they're not going to do anything. Last week, that kind of put a start to the sell-off. Right now, the Fed probably doesn't have anything to say for a bit until the 17th, but maybe the employment report may provide a bit of a stop.
And Oliver Renick joins us now for Bloomberg News. And Oliver, we have seen those strategists start to lower their calls for the S&P. Adam Parker, the latest today, lowering it to 2,200 from 2,275, but still not dramatic shifts in that judgment.
No, you're really not. I mean, 21 people that we survey, strategists across the street, 17 of them are still have the same estimates that they've had pretty much towards the beginning of the year. And the other thing to point out, we talked about earlier, is that Adam and the other folks that have brought down their estimates, they're not bringing them down by a huge amount, apart from Sean Darby from Jefferies saying the S&P is going to end lower, and I use lower carefully as his price target is at 19 right now, we're getting down there. These are largely moves saying, okay, we're going to pull it back a little bit, but overall the average is still around 2,200, which is a huge move up from here relative to where we've been. That's a 14% rally. So yeah. It's no small feat for stocks. They've obviously got a ways to go, especially if that September rate hike is now kind of back on the table. I say back on the table kind of hesitantly because a week ago it wasn't, and now suddenly people are talking about it again. So it does seem like there's a few hurdles we're going to have to get over to get there.
Krishna, how much repricing do you think the stock market has to do when it comes to oil price? It seems like that has really been in part leading the market in energy stocks much lower.
I think the oil price thing, clearly it can take the market significantly lower, but I think the probability of that is probably small. I think oil prices have been in decline for almost a year. The story here isn't oil. Oil is reacting to China just as much as the rest of the market. So the central story is slowdown in China and what, if anything, Fed does to remedy that situation for the U.S. economy.